Well, hello and welcome to this video, which is an introduction to the VRSI indicator, which is the volume relative strength indicator, which has been developed to combine the elements of price and volume in much the same way as we do in our volume price analysis. But the reason we've developed it is really to try and create a look inside that relationship from a pressure perspective. And indeed, pressure is a term that you're going to hear a lot about in this video and also in the forthcoming videos, because in essence, this is why we developed the indicator, to really try and reveal in a very graphical and straightforward way the pressure that is associated with a move. Are we seeing a move associated with strong pressure? Are we seeing it associated with rising pressure of volume? Are we seeing that volume pressure diminishing? And really, this is the key. So it is the word pressure that is going to dominate this particular indicator. As I say, it is a combination of price and volume. It looks at the relationship between the two. But it is, and I must stress this at this point, it is very much supportive of our volume price analysis methodology. Volume price analysis methodology is the core. And what this indicator does, as I've just mentioned, is to really give us an alternative view, to look inside that, to peel back the layers of that relationship, if you like, and to access it from this pressure perspective. We've tried to think of another term, but we think pressure is really the term that encapsulates it, the term that describes it in the best possible way. I've got several examples here. We're on a 10-minute time frame, and what I've done for simplicity to really get the message across is look at several examples, just a single chart here. I will be doing other videos where we look at it from a multiple time frame perspective. And can I also add that the indicator can be used across all time frames, from the fastest, if you're a scalping intraday trader, fine. If you're a trend or swing trader, absolutely fine. From an investment perspective, terrific, because what the indicator reveals, as I say, is the pressure of the volume associated with the price move. So just to reinforce what I was saying earlier, first of all, the reason I've taken this approach with a single chart is for clarity and simplicity. So we're looking at one chart in a single time frame. But I stress in all the other videos, you will see multiple time frames, which is an essential component, whether we're a trader or an investor. And in addition to that, as you'll see, we have 6 charts. We'll have 3 on the top, and then below that, we'll have identical charts, precisely the same time frames, but purely with volume. So we're using our volume price analysis methodology with our VRSI indicator, because the two are a blend. They are a perfect combination and always to be used together. But for the purposes of this introductory video, I just want to focus on the volume relative strength indicator itself. Now, I've chosen 7 stocks. They'll all be familiar names, all from S&P 500. And the reason that I wanted to start with Nike, which is the first one we're going to take a look at with the indicator, is that it really encapsulates all the elements of how to interpret the indicator itself. And there are essentially 4 primary components, if you like. The first one is really self-evident, which is the fulcrum line here, which is the point at which the indicator moves from bullish to bearish or from bearish to bullish. And clearly it is a key level. So we're always keeping an eye on that. So that's the first point. The second point, as you can see, we have different colors. And very simply, the darker colors represent, in this case, very bullish sentiment. A lighter color of the lighter blue is a less bullish sentiment. Equally, for our bearish sentiment, we have this dark brick color. And then for less bearish sentiment, we have the salmon pink, if you like. So that is the second component. It's very much a color combination where we have the darker colors represent strong sentiment, the weaker colors less strong sentiment. Very simple to understand. The third element of the indicator is really the height of the pressure bar. And we use pressure a great deal when we're talking about this indicator. And as I explained, this is really a peeling back of the volume price analysis methodology and trying to look inside that through the prism of volume and price to gain some understanding and some indication of the pressure that is being applied to a trend, or indeed the lack of pressure that is being applied through a congestion phase. So it is very much about pressure. And when we look at these particular pressure bars, what we're looking at is clearly the height. And the reason this is such a simple crossover, a mirroring, if you like, of the volume price analysis methodology is that many of the analytical approaches that we take when we're looking at our volume price analysis bars and candles are also applied when we're looking at the pressure bars. And height is one of these instances. We are constantly looking not only at the height itself, we're also looking at how it is rising, how it is falling, and also another aspect of volume price analysis is very much benchmarking, where we are comparing the height of one volume bar with one in an earlier phase of the session. We're trying to judge whether that volume is higher or lower in relation to the price candle, and therefore draw some conclusions from that comparison. And it's very similar here, where we're looking at pressure bars earlier in the session, where they come later in the session. We're looking to compare them. Is this higher? Is this lower? And so on and so forth. And as we walk through the examples, you'll see all this come into sharp focus. So that's really the third element. So it's the fulcrum down here. It is the color transitions from darker colors of very bullish or very bearish to the lighter colors of less so. And thirdly, we're constantly looking at the height of the pressure bars, how they relate to one another, how they relate in combination, what is their sequence, is it rising, is it falling, and so on and so forth. The fourth combination, or the fourth aspect, if you like, is very much when we move to looking at this in multiple timeframes, which we'll look at in later videos. But for the time being, I really just want to focus on those key elements here. Now, the reason, as I say, I chose this particular stock and this chart is because it draws all those three basic elements together, if you like. And if we start over here on the left-hand side, you can see through this phase of price action, the pressure is pretty low. It's oscillating around the fulcrum. It's not really going anywhere in terms of price action. And then we start to see this bullish sentiment begin to take hold. And this is one of the examples I wanted to really show you and dwell on for a moment, because in just the same way as we look at volume, when we're looking at volume and we're looking at a rising trend, we want to see rising volume. It's VPA 101, if you like. That's what we're looking for. And here we've got precisely the same thing. And indeed, you could be looking at volume in this context, because we've got rising bars here. We've got a little bit of a falling away here. And this is another facet of the indicator, which again, you'll see many examples of this. We've had the nicely rising trend, and the trend is rising strongly. The angle of inclination there is pretty steep. It's up at about 60 degrees. It's well away from a 45 degree, which might be up here. So this is a pretty steep trend. It's gone up pretty quickly. And what we're seeing mirrored by that price action, which is steep, is that we're also seeing a rapid increase in momentum, in pressure, as the pressure bars rise in accordance and accompany that particular move. So we can be assured, looking at this, that yes, we are seeing, if you like, we would relate this in terms of VPA, we would say price and volume are in agreement. In other words, there are no anomalies here. We've got rising price and rising bars, and it's exactly the same principle here. We've got rising price and we've got rising pressure bars, which is really, really nice to see. Now, the next element is when we get this minor reversal, minor pullback. What do we see? Do we see the pressure falling all the way back down to the fulcrum? No. We see two things. First of all, we see a change in color. So we've gone to a lighter blue, which is not a surprise. In other words, the upwards pressure is diminishing a little bit. It's easing off. So we've had a weakening of that, a very bullish pressure in these first 5 candles. And we're now seeing a slight weakening of that. The next price bar is down. It's not particularly widespread. It's relatively narrow spread. And the pressure, the height of that particular pressure bar is lower than the previous one. So again, we're seeing a weakening of the bullish sentiment that was very clear over here. But we don't go all the way back down here. And this is the important point. The bar itself, the pressure bar, is still maintaining quite a high level and really confirming for us that whilst we are seeing a pullback, this does not appear to be at this stage to be a full-blown reversal, because the height of this particular bar has not fallen, it's not sunk, it's not gone all the way down here, it's just eased off a little bit. And therefore it's no surprise when we get on the next bar a big injection of pressure, higher than the previous ones indeed, and on up we go to the next level. We then get a repeat of what I've just covered here, this time with 3 candles, relatively narrow spread. Again, we see the decline in, first of all, the change in color back to light blue, and then the height of each one declines steadily. And then we flatten off as we move in to a further phase of bullish sentiment. But the angle of the trend here is much less steep. It's relatively measured, even paced. It's not particularly strong, yet we still get a punctuation of pressure being injected in this move. So it's still telling us that, yes, there is a bullish momentum in this move, but it has slackened off. And this really goes back to my initial comments about the things that we look at when we're analyzing the indicator. It's very much where we're benchmarking. If you remember what I said about benchmarking, and I'm sure you've listened to videos from Anna and myself about benchmarking when we're looking at volume price analysis, we are constantly looking at the aspect of the volume bar and how it relates to other volume bars in the same session, which is the key point. And here it's a very similar sort of thing. We're looking at these. We know we've got pressure because we've gone to a darker color. So we've definitely got some pressure here, which is fine. But the key point is that it is a much lower level than we were seeing over here. And that's no surprise, purely because the angle of inclination of the trend here is so much flatter. It's not as steep as it was here. It's much less steep down at, I don't know, let's say 40 degrees, something like that, 35 degrees. So it's quite a shallow incline. And this is something that you will see all the time with the indicator. The height of the pressure bar will generally relate to not only the spread of the candle, but also the steepness or otherwise of the trend that it is supporting. So the steeper the trend, the more aggressive, then the more likely it is that you will see higher pressure bars, as you do here, in a relatively modest trend high where you've got relatively narrow spreads, nothing excessive. The trend is not shooting up. And these comments apply equally to downwards trends, as you'll see. Then you're more likely to see lower levels such as this when compared with levels over here where you've got a very steep trend. So again, it's another facet, if you will, of the indicator and how we view it and how we analyze it. We then move into our congestion phase at the top here, narrow spreads, and you can imagine what the volume is probably doing at this stage. It's probably flattened off, not really going anywhere. There won't be any huge variation in the volume bars at this point. And what we're seeing here is that really mirrored in the sense that the pressure bars are constantly diminishing here and moving all the way back down to the fulcrum point down at 0. And that's really telling us that this trend, for whatever reason, has run out of energy. It's run out of momentum. It's in a congestion phase. Now, that may well move higher in due course. We just have to wait and be patient. But for the time being, what it's telling us is that the pressure that was injected in this trend at the start has now all but evaporated, and we are back down to our fulcrum, which is what we see. And then we see the reverse of that, the mirror image, if you like, as we get the downtrend taking hold. And precisely the same as we would look at volume in a price waterfall, we will be looking for rising volume as the price descends with widening spreads, or at least spreads which are similar, which is indeed what we have here. And as you can see, we have exactly the same principle applied to our pressure bars as we go. The height increases. First of all, we get a change in color here to the darkest color. And what's interesting here is we've not gone from a light blue to a salmon pink and then into a brick red to signify a complete rotational cycle, if you like. We've skipped one of those. We've skipped the salmon pink on this occasion. And again, this gives us a clue as to the sentiment that has changed, but it's actually changed quite rapidly and significantly. If this was salmon pink, then this would be a gradual change. In other words, denoting a market that is rotating gradually from bearish to bullish or bullish to bearish. But in this case, what we've seen is a change immediately from a light blue above the fulcrum, and we've instantly gone to brick red on the next pressure bar to the downside. It's not a huge pressure bar, as you can see, it's very narrow, but nevertheless, the fact that the color has changed to a dark color signifies that this is a significant and rapid move, change in sentiment, if you like. And really that's then confirmed with the next four pressure bars. As you can see, down we go. Very nice price waterfall. There's no pullbacks in here. We just carry on down, so we get a nice injection of pressure. Very comfortable to trade that. And of course, they are also increasing in height. And this is precisely the same as we would expect to see in terms of volume. We want to see rising volume in a falling trend, because that signals that the trend has legs, it has momentum, it has some momentum behind it. Precisely the same analysis can be drawn here, where we see these pressure bars rising. They're therefore signaling to us, yeah, this is a solid trend and it's got momentum because it's got some pressure behind it as well. And then we come to the end of that particular trend. And the reason that I wanted to show you this chart to start with is to draw out another piece of analysis that we then do, because what this signifies, the fact that we have got some changes in color in here to the salmon pink, which is absolutely fine. But what this phase of price action also tells us, by virtue that the pressure bars are not only the same height, they're actually increasing in height slightly here. But what we're seeing throughout this phase of price action through here is that pressure, that downwards bearish sentiment, is being maintained. We are not seeing them fall away. We are not seeing dramatic changes in height. Indeed, we are seeing a continuation of that height in the follow through. And it's an absolutely paramount analytical conclusion that we draw from that the bearish sentiment on this particular chart remains intact, and it remains intact by virtue of the fact that the pressure bars here are pretty much all the same height. They haven't changed dramatically in terms of height. We've still got lots of nice dark ones here, punctuated with changes to salmon pink, which is what you expect to see. For example, where the market tries to rally here, this hardly looks like a significant rally anyway, because it's got a wick to the upper body, and if that was associated with decent volume under there, we'd know for sure from a VPA perspective this was just a minor pullback, market makers dumping into a weak market before it carries on lower. And that's the analysis we would conclude, assuming that the volume, that's what the volume was telling us. And all that's happened here is we've gone from a relatively high or tall pressure bar here, and we've just transitioned through to salmon pink. We've dropped a little bit in terms of height, but not a huge amount. We haven't gone back to zero fulcrum, for example, and then we just pick that bearish trend up again. And again, this really reinforces another aspect of this indicator, which I've mentioned in other videos, which you'll see on other platforms, certainly on NinjaTrader, and I'll be doing the same on TradeStation and others. The hardest thing to do in trading, and we all know what it is to stay in a trend once you've got some profit in the bank. So you've entered a position. You might, for example, on this congestion phase, you might have put some floors and ceilings in here and said, well, okay, if it breaks below this level or maybe below this level or even here, whatever the case may be, trading from breakaways, congestion phases is a fantastic way to trade because it gives you so much protection and a place to place your stop loss above your price action. But the key point is then holding that position to maximize any profit. And that's the biggest problem we all face because we know what the emotional trigger is. Once we start to see a market pulling back against us, we've mentally banked that profit. The market starts to pull back against us. And our emotional response is to take that money off the table and close the position. And of course, 9 times out of 10, we sit there and watch in horror as the trend is then reestablished, often at a more rapid pace, and we're left high and dry with a small piece of profit and wishing we'd stayed in. We've all done it. We've all been there. We all suffer it. Anna and I, we have to deal with this. We've dealt with it over 25 years, but I can assure you it's still there because the market makers themselves know how powerful that emotion is. And they also know how powerful the emotion is of the fear of missing out. When a market snaps higher, we want to jump in, we inevitably get trapped at the top because the market then goes into congestion or reverses, as no doubt you've seen on the volatility indicator many, many, many times. So the reason we developed this indicator is very similar in this idea as per the trend monitor, in that they are designed not only to assist us in our VPA methodology and to draw out other aspects of the VPA methodology, but also to help us to stay in a trend once a trend's underway, to give us that confidence. If we have the confidence, something to give us the confidence, which VPA does anyway, but this is like another confidence builder on top of that. So you've got double confidence, if you will. You've got VPA at one level, and now you've got this to really help you reinforce your confidence in saying, okay, I see what VPA is telling me. I can see what what this indicator is telling me. And I can see from all of that that really this is just a minor reversal. It's really not going anywhere. And I'm going to hold my ground and I'm going to sit through it. And I'm going to continue taking advantage of this trend. So that may not be immediately apparent from one of the reasons we developed this indicator, but it certainly was there in amongst everything else to really try and help everybody because we understand what it's like to maintain a position once you're in. And I hope you can see from the example that we've started with here on Nike that not only have I tried to draw out the fundamental key points of the indicator, why we developed it, and very broadly, the analytical approaches we use when we're assessing what is going on. But there is also that element to it, which is there to help you in making decisions which are based on logic and analysis and common sense and not on the emotional response triggered by the fear of losing a profit, which is the biggest fear of all. So let's move on to our next example, and I've got Oracle next, which is ORCL. So we'll just click on that one. There we go. This is Oracle. And in a way, a similar sort of layout, similar sort of example, really just to highlight the two aspects where we're looking at the bullish sentiment, the bearish sentiment, and how the bars, the pressure bars, all relate. We start over here on the left-hand side of the chart, and what I really wanted to show you here was we start off. This is the start of the session, 2:30 UK time. If you're wondering why it looks a bit odd, but we're in the UK, so it's 2:30 here when the US markets get underway. So we get a big injection of pressure to start with. Now, we inevitably see this as the cash markets open. You'll see this virtually every single day. Lots of volatility, tons of volume coming in, markets moving about all over the place, and the same will apply to stocks. So the first 10, 15, 20 minutes is always this sort of price action. But the point I wanted to make with this really, and the reason I chose this chart as an example is we see this volatile, long-legged dojis, lots of volatility. Off we go. Pressure comes in, upwards pressure. That's fine. We're bullish for the time being. when you see this candle here, you think, oh gosh, shouldn't the indicator be right down here? And all it's telling you is that, yes, we've gone to a light blue, we've gone to less bullish sentiment than when we started, which is no great surprise because we see a huge injection coming in at the start of the session. But really all that's happened with that particular candle is that we've seen a reduction in the height of the pressure bar and really not much else, because then what follows is we get an injection of pressure here, which is great. The height of these stays pretty much the same. We're not falling away, and just comes back to reinforce what I was saying about always looking at the height of these bars in relation to one another, in relation to the one that's just gone and the sequence that has preceded it. And you can see here they're all pretty much the same. And then we start to get into a nice little trend run, and we get the three pressure bars rising, and we're seeing rising price in combination with our not only our change in color, but also change in height. So they are rising nicely too. We then move into a minor congestion phase. And as you can see, they start to fall away a little bit. And this is really telling you that despite the fact that we have an injection of pressure here, they are declining the whole time. So the trend is really weakening, and you can see that all the way through. And again, if you think about it in volume terms, it's very much the same there, where you're looking at a whole range of volume bars. In this case, we're looking at the pressure bars, and we're trying to interpret what is happening. And when you judge them according to the last handful here, you can see how we're starting to fall away and diminish, and the strength of that bullish trend has been has diminished and has gone now to zero, and we move into our bearish phase. And again, if you like, very similar to the first example, we've now got falling price, we've got rising pressure bars, we go to brick red, which is great. And again, we transition straight out from a lighter color into a darker color. So we've gone, the sentiment here is pretty strong, that change in sentiment from our what was bullish, now we're into bearish. Down we go, and as I say, the color change. And also notice how, whilst we have got a decline here, they are pretty much holding up the height of those bars there. So again, it's telling us that yes, this is pretty bearish to stock right now. Not a great decline here. So it's telling us that as we look at the height there, the bearish sentiment is still pretty much in ascendancy at that point. Now, the other thing I wanted to do here was to show you something else which can help to, when you're looking at these charts, and we also do this sometimes with volume, where we get a large volume bar or a bunch of volume on the left-hand side, this can distort what is going on the right-hand side. And you'll see this quite often when you're looking, obviously, at the volume surges that come in at the start of the trading session, and you want to really screen those out. And what we do is just to expand the chart up like that, because we want to move that one away. And there we go. You start to get a different perspective on the height of the bars. And you'll find this quite helpful, particularly where you've got maybe a spike, you've got a big pressure bar at the start of a session, 2 or 3 maybe, and then as the session settles down, you get into the trading levels of the day. And as I've explained in other videos, I think on the VWAP video indicators, the typical volume profile that you see in any trading day on a stock, or indeed most things, but certainly in stocks at any rate, is you get a big surge in volume in the first 15-20 minutes. We then settle down into the variable volume through the trading day, which will be at a lower level. And then as you come out at the end of the trading session, at the close of the session in the last 15-20 minutes at that end, the volume spikes up again. So you get this kind of parabolic shape to the volume. And in order to try and remove some of that volume, which tends to compress what follows thereafter, you have to expand the charts in this way, which is why I've done it here, to really show you that looking at this when it's being compressed by the effect of the volume on the left-hand side of the chart, it may look relatively minor, but when you remove that bar, as I've done now, it really demonstrates the strength of the pressure that is being applied to this particular downtrend. So I wanted to show you that, and that's another reason I pulled this chart in, because it's quite a handy little device, a little trick we use to divorce what you're seeing now and divorce it from what was happening earlier on if it's distorting the volume, or in this case, the pressure bars. It helps to give you a different perspective on the chart itself. So that's Oracle. Let's go and have a look at the next one, which is Disney, which I'm sure you're familiar with. There we go. And let's just pull that over a little bit. There we go. There we are. Fine. I think we're more or less okay for size. Yeah. This is the start of the session, round about, just about here. And again, it really reinforces a lot of these aspects that I'm trying to convey in this introductory video. First of all, we had a bearish phase of price action, but that really wasn't going very far. And you can see how in this case, the pressure bars are falling away. They've gone to salmon pink, and now we move back into a bullish phase of price action, and we go straight into bullish at this stage. So in this case, we've gone from a light salmon pink, so we haven't gone from dark to light, we've gone straight from light, and we've gone straight into the dark blue of our bullish sentiment as we pick up the trend, which again, as you can see, is rising very sharply. And it reinforces the point I was making, that when you see these price bars moving, or the angle of inclination of the trend, if it's rising sharply, you are likely to see these pressure bars rising just as fast, really reinforcing the strength that is being injected, the momentum that's being injected into that trend. We then move into congestion, and almost immediately the height of the bars changes. It drops away quite fast. We've also gone to a lighter color, as you would expect. And even though we get further pressure injected here with a little step up in terms of the momentum, as we move into this long congestion phase here, you can see how this is dropping all the time. And even though we get a further little injection of pressure here, this trend is really not going anywhere soon. And then, of course, we rotate and we come out the other way. And this time we've gone from light blue straight through to brick red. So we've missed completely the step of light pink, if you like, the salmon pink, and we've gone straight back into our downwards trend. And once again, as you can see, the height of these pressure bars is pretty similar throughout here. So we're not seeing anything like this, for example. We're not seeing the fall away in the pressure bars. They are maintaining a decent height. We've got good, strong color, but even the colors in the weaker ones, where the sentiment has weakened slightly, are staying pretty strong. So it's really telling us, and then we get a snap move right here at the end of the day, with a change to bullish sentiment, where this drops away at the end. So throughout this phase of price action, this is what we're looking at. We are constantly looking at the height of these. Are they pretty much the same? Are they rising? Yep, absolutely. Happy days. They're still being maintained. We've got even more here. Fantastic, no problem at all. That one's fine. Okay, it drops away. And it's only when we start to see a dramatic change in height, where this has halved, that may well be a signal that the bearish pressure being applied to this particular trend is now waning and coming to a potential end point. And indeed, that's what we see right at the end of the day here. So that was Disney. Next one is JPM, which is JP Morgan. Let's have a look at them. JP Morgan Chase. There we are. And really what I wanted to show you here was typically what a congestion phase looks like. We had some bullish momentum injected here, steep trend developing, and then it starts to fall away quite quickly, really telling us that this bullish trend is really not going anywhere. And we're into this congestion phase, and we see very low pressure bars, really not very tall. And ultimately, we come down to the fulcrum point, and then we see what we've seen elsewhere, which is a dramatic reversal, very strong pressure, bearish pressure rising, 4 of those rising one off the other, bang, 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 which is exactly what we want to see. If we were looking at this on a VPA chart with volume, we would want to see falling prices and rising volume. And it just confirms to us that that's what we're seeing. We are seeing a strong trend being supported with volume. Here we're seeing it supported with pressure. Once again, yes, we changed to a lighter color, to the salmon pink, but the height of those bars is maintained. It's not falling away. It's not gone dramatically lower. So it's still helping us to stay in. We would also be seeing things like this saying, yeah, okay, that still looks pretty weak to me, not particularly strong. It is only when you start to see the height of that bar fall away and start to reverse a little bit that then we start to think, okay, this is maybe coming to an end now for this particular stock or whatever it is we are trading. The next one is PepsiCo, which is PEP. Let's pull this one up, and I'm sure you can appreciate why I've selected this one. But again, it really reinforces the whole business of trends and how they develop and what congestion phases are going to look like with the indicator. And as you can see, there was an initial rally right at the start of the session, really didn't go anywhere. And then we start to see, first of all, we have a sliding lower. So in this phase of price action, yes, it's a trend. It's very gradual. The stock is subsiding, I would suggest. It's not trending lower. It's like a souffle almost. It's flattening, it's deflating. It's like a balloon that's got a small hole in it. So it's really not descending with any great speed, but nevertheless, it is bearish. We're below the fulcrum. But look at the height of the pressure bars. They're not very tall. They're relatively short. And what it's telling you is that this is a trend that is not steep. Nevertheless, it is a trend. We know what the sentiment of the trend is. It's bearish because we are below the fulcrum. It's punctuated with low or relatively short pressure bars, which are telling us, yes, there is bearish momentum and it's strong, but the inclination of the trend is relatively gentle, and therefore the height of the pressure bars is relatively short. When the trend picks up momentum and starts to develop some momentum as we get to the end here, the spreads are widening, as you can see. That is telling us that we are starting to see an injection of momentum, and the pressure increases, as you can see, dramatically towards the end of this move. And that's the reason I chose this particular example, is really to demonstrate that, because it does it perfectly on this chart and gives us both scenarios, the gentle trend lower and the relationship that you will see with the pressure bars in that scenario. And then at the end of it, we have this big collapse in price where the price has moved dramatically, pressure increases dramatically, the bar heights go much taller, we have the color changes, we have a lot of dark brick red here. It is punctuated with salmon pink, but those salmon pink bars are still pretty tall. And throughout the whole of this price action, there is no suggestion of a slowing down of that sentiment. We haven't got the height of the bars declining significantly towards the end. It's just continuing. So it's telling us loud and clear, don't exit this move yet. If you're in, just stay in, hold a position, because that's what the indicator is telling you. And of course, as I keep repeating, and you're probably sick of hearing it, but I can assure you it is a mantra. We would be looking at this from a VPA perspective as well. Of course we would, and drawing our conclusions from there. And this is why the two indicators work so perfectly together. They are a marriage made in heaven, if you like, where this is the sister indicator. It's just a peeling back of the layers of the volume price analysis methodology to give us this very clear, very graphical and straightforward way of building our knowledge of VPA methodology, if you will, and also simultaneously giving us help in maintaining a position once we are in it. So, as I say, a very nice example, and the takeaways from it, I think, are very clear, really demonstrates it beautifully that the steepness of the trend, and in this case, yes, it's a downward trend, but exactly the same principles would apply in an upwards trend. If this was inclined, this was rising very steadily, very gradually, you would see a similar sort of shape to the bars. They would be very low, possibly punctuated with pressure here and there. And then if you saw a sudden rally, maybe some news, some stock data, whatever, you would see the pressure rise dramatically as the price action took off. So it's exactly mirrored with a bullish trend. In this case, we're looking at a bearish trend, but the principles of what I've just explained would apply in precisely the same way. Two more to go. We've got Exxon Mobile, which is XOM. So let's have a look at that one. And then we've got Wells Fargo at the end, just to take a look at that one. This is, as I say, this is Exxon Mobile. And the reason I've chosen this one is, again, first of all, to show you the removal, that first bar there really does help. It just describes the price action over on the right-hand side a little more easily. But the other reason I showed it or brought it up as an example is to demonstrate really, I suppose, what I was saying just now. What we've got here is we've got an initial injection of bullish momentum here on these 4 candles. So we have some tall pressure bars here, which is absolutely fine. And we had an injection here and we maintain that momentum. But then as the stock tries to, we are in congestion with a very mildly bullish tone, I would suggest. The stock is trying to rally, but it's really, really not going anywhere. So the angle of this trend is almost horizontal, but not quite. It's trying to claw its way up, but it's really not going very far. The spreads are very narrow. There's a lot of two-way price action there. It's really it's lacking pressure. It's lacking momentum. And all of that is revealed in this slow and steady decline lower. It's almost like a death spiral. Down we go, and we slide our way down to the fulcrum, almost in a metronomic way, if you like, as the price action tries to go upwards. So the pressure is constantly waning, it's dribbling away, it's draining away, and it goes down to next to nothing at the bottom here. And then the reverse of that happens, where the stock rolls over and we get quite a steep trend lower in these 5 candles, and we go almost immediately into our bearish phase. We go to brick red. We've got rising height of candles here, and pulling that one out to the left just gives us a sense of where we are. There we are. And you can see here we've got rising pressure. We've got falling price, which is great. And then as we come to the end, once again, what we've seen on many other examples we've looked at, we see, yes, the height declines here as we get this 2-bar recovery. But then we go snap straight back into brick red again as this candle comes in, and really telling us from the height, not only of that one, but the next 2, that bearish momentum has been restored. Simply telling us loud and clear that these 2 candles here were a minor attempt to rally, not really going very far, which is you would infer anyway, purely looking at the price action for one, where you've got a narrow spread candle like that. That's hardly indicative of a stock that is going to rally. You would want to see the spreads widening, and they've narrowed dramatically on those 2 candles from one to the other. And in addition of that, of course, you'll be looking at the volume associated with it as well. So again, I've chosen all these examples to try and bring out the principles of using the indicator in this introductory video, which I hope I've done. And just one last example, which is Wells Fargo, which is WFC. Let's put that one in. There we go. And really just rounding off with, I suppose, pulling it all together, if you like. This is a complete cycle, if you like. We start off with our bullish momentum. We've got some rising pressure here, which is fine. We go up to the top here, and it then starts to diminish and fall away quite rapidly. And even though we get punctuated with some further pressure here, what is happening to this trend? Well, it's really not going anywhere, and it's starting to slide, and our pressure is falling away in the same way. We come down to our fulcrum point. We oscillate around this level. Very narrow price action through here. As you can see, it's really not going anywhere. And you will see this a lot when we're in congestion. Expect to see very, very narrow pressure bars. They will oscillate up and down, above and below the fulcrum, but they will tell you loud and clear that really is nothing going on. And of course, that would be reinforced with the volume profile that you would see associated with it as well. And then we start to see this is an almost perfect price waterfall that we've got here, because it's associated with 1, 2, 3, 4, 5, 6, 7, 8 pressure bars, which all build on one another, one after the other. I mean, I couldn't draw that better. In fact, if I was putting this on a graphic, on a keynote graphic, for example, to show you, that's pretty much what I would describe as the perfect example of a price waterfall with this particular indicator, or indeed with any, looking at the volume, the rising, we draw it as obviously the volume would be the other way up, but it would be a very similar look. So you'd have the volume rising as your price is falling like that in a really smooth arc, which is what we have here. And then we come down to the bottom here and we move into the end of that phase of price action. We've still got some bearish price action here because we're still got bearish pressure. We then get an injection of potentially a reversal coming on stream. The price falls, the pressure bars falls. We come back down to the fulcrum here. So it appears we're coming to the end, and then we get an injection of upwards pressure right at the end of the day. This was the closing bar of the day, which we often see. You will often see that on stocks at the very end of the session, the last bar, whatever it is, 10-minute, 5-minute, whatever it may be, you will see a snap, a reversal. It happens a great deal. And as I say, the reason for that is because you get these big injections of volume which come in at the start and the end of the session, particularly at the end of the session in the last 5, 10, 15 minutes. And you will see that occurring across almost all stocks intraday. So there we are. Those are the 7 examples that I wanted to cover in this introductory video to really convey the concepts of this indicator, why we developed it, how it works in combination with our key cornerstone methodology, which is volume price analysis, which is absolutely essential in using this indicator in combination. And you'll see that in all the other videos I record, where you will have the indicator above on one chart and you will have a clean price chart with simply volume below, because I believe that is the way it works. Now, you may be comfortable putting volume on this chart as well. That's absolutely fine. I've just taken it off here because I wanted to focus on the indicator to start with, the volume relative strength indicator in isolation. And then in the next videos, we will put it all together. We'll look at multiple time frames. We will look at different markets. We'll look at more stock examples. We'll look at ETFs, indices, and so on and so forth. And also, can I say, we will look at slower timeframes as well, very much going out to the dailies, the weeklies, and the monthlies, because this can be used in any time frame. I don't want you to run away with the idea that this can only be used as an intraday tool. Is it anything but you can use it from a seconds chart right the way down to a monthly chart and everything in between. The principles that I have explained in this introductory video work in exactly the same way, whatever your time frame, it doesn't matter. And again, it mirrors volume price analysis, which does the same. It doesn't matter what the ticker is at the top of the chart. It doesn't matter whether it's a stock, a crypto, an index, a future, commodity, ETF, you name it, it doesn't matter, because everything works according to price, the indicator, volume, and everything else. I hope you've enjoyed this particular video. Lots more to come on the TradingView platform and the volume relative strength indicator. So thanks for joining me here. See you soon, and bye for now.